Let me paint a scenario for you, because chances are you've been here. You jump on the charts, flip to the 1 hour time frame, and everything looks perfect. EMAs are lining up, price is breaking out, and momentum looks strong. So naturally, you're thinking about going short. But then just to be safe, you zoom out to the daily time frame and suddenly your confidence drops. The daily time frame shows you a clear uptrend, vector candles still unrecovered, EMAs are curving up and to the right, and structure is showing higher lows, higher highs. So now you're stuck. Do you go with what you saw on the 1 hour time frame, or do you trust the daily time frame narrative? That right there is time frame conflict, and it's a problem every trader runs into, especially when you don't have a system. The truth is, every time frame is telling you part of the story. The 1 hour might be showing a retracement within a larger bullish move. The daily time frame might be primed for a reversal, but not yet confirmed. So the question becomes, how do you know what to trust? That's where a top-down system comes in. It gives you structure. You start from the monthly, then the weekly time frame, then the daily, and only then do you drop to the 4 hour and 1 hour time frame to refine and prepare trades. The model we trade keeps you aligned with the bigger picture while still taking advantage of intraday opportunity. Whether you're a day trader looking for quick moves or a swing trader who wants to stay in your trade for day, multi-timeframe analysis is the secret weapon. And today I'm going to show you exactly how to use it. Hi, my name is Janet and this is 𝗟𝗶𝗃𝗲𝗃. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like button nice and early for the YouTube algorithm and hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. Today, I'm giving you a behind the scenes look at how I do my full technical analysis across multiple time frames. You'll see how I spot key vector candles, refine entry levels, and align the higher time frame narrative with lower time frame precision. If you love structured trading tutorials like this, make sure to hit the like button, subscribe, and let's dive straight into the monthly chart. Let's start with the higher time frames. The daily, weekly, and monthly time frames are the time frames you would use and chart to establish what the macro trend is doing. They help you understand where the big moves originated, where liquidity may be sitting, and which zones are most likely to influence price when revisited. If you do not yet have these vector candles on your chart, you can simply add it by coming up to indicators, typing in PVSRA, and choosing the one that says PVSRA candles auto override by 𝗟𝗶𝗿𝗃𝗲, and this will add the PVSRA candles to your chart and also give you the volume bars down the bottom. So you want to start by identifying the closest vector candles above and below price. We don't have any above, but I can see this large one here. These are areas where price has moved with force and are likely to be revisited because they cause an imbalance. Now in this case, the closest one to price is this one here. So you would go through and mark out this whole area of interest. But now that I can see that we've got price moving through it, there's no need for me to mark out that whole area. And instead, I can mark out 50% of that vector candle and then go ahead and label that. This just saves me having so many areas of interest on my chart, because as we start to move down in time frame, there's going to be vector candles everywhere. So what you can do is mark out that 50% level and then make this area of interest smaller by marking out the unrecovered part of that vector candle. Marking out these zones help you to stay focused on high probability reaction areas. You're not trying to be precise here, you're trying to build context. Next, you want to look for any major support and resistance levels, monthly highs and lows, previous weekly closures, key psychological numbers like ground figures or all-time highs, and these are your macro turning point. So the next resistance that I can see would be the all-time high, and my major support area would be back in this zone here. Now these levels may not be touched for weeks, but when they are, you want to be ready. When this vector candle had formed, you would have marked out that vector candle, but look how long it took for price to come back down into that area. These are monthly candles, so it took a total of 3 to 4 months before we even came back into this unrecovered vector and bounced off 50% of it. The next thing we want to do is zoom out and ask, what is the bigger picture here in regards to market structure? Are we creating higher highs and higher lows, or is price looking like it wants to turn around and start a new trend? At the moment, I can see higher highs, higher lows, higher highs, higher lows, higher highs. So we are clearly in an uptrend on the monthly time frame. If the monthly time frame is in a clear uptrend, but the weekly time frame gives you a lower high, then this might be a sign that momentum may be shifting, because it's going to take a decent amount of time for this monthly trend to actually change trend and do something like this. So you're watching the lower time frame for signs of an early change in trend. So use these areas for context, not for entries. And this is super important. You're not entering trades off the monthly or weekly chart. These zones are just for context. When price eventually trades back into these areas, you'll know to pay attention, and that's when you drop down to the daily, 4 hour or 1 hour time frame to refine your entries. These higher time frame zones become your watch and assess areas. When price returns to them, you're ready to zoom in, not panic or chase. So now that we've established where our major support, resistance levels are, our unrecovered vector candles, established what the market structure is doing, we want to drop down to the weekly time frame and repeat the process. First of all, we want to look for the closest unrecovered vector below and above price. I don't have any above price, but I can see this one here. So I'm going to mark this whole vector candle out and label this my weekly area of interest. Because price has not moved back into this area of interest, I'm going to mark out the whole candle instead of marking out 50% of this level. And this comes down to personal preference. Once I drop down in time frames, I might be able to refine this area so it's not such a large zone, just so we can pinpoint our entry zones. It is at this point where I would get rid of this monthly area of interest, or I would put it into its own folder, just so I can hide it. And if price ends up dropping through and recovering all of this weekly area of interest, then I can simply put it back on my chart and I'll know that it's there and it's an area to pay attention to. So for now, I'm going to get rid of that one. And this helped me to clear up my chart. The next thing we want to do is mark out our major support resistance levels on this time frame. As I zoom out, my resistance level is going to be the same, which is the all-time high. And this major support area, I might be able to bring it a little bit higher so that it lines up with this peak formation high and this peak formation high as well, because I can see that price has rejected this area many times before we had that big impulsive move to break it. So now it would act as a support level, which means I can now get rid of this line so I don't end up with so many lines and areas of interest on my chart. From there, we want to establish what is market structure telling us. We have clearly created higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and we are currently still in that uptrend. Once these zones are drawn in, you keep them on your chart. They become your reference point all the way down to the 15-minute time frame. Macro levels like the monthly and weekly high, low, and vector candles are critical because they show us where the big players have made their moves. And these aren't just random candles on a chart. They reflect large amounts of volume, structure shifts, and liquidity grabs. Moves that actually shape the market. When price returns into these zones, it's often not by accident. There's a chance to observe, react, and capitalize because that's where the decisions are made, and momentum is often born out of that. Here's a better way to think about it. Macro levels are like ocean tides, and micro levels are just the ripples on the surface. If you only focus on the ripple, like the 5-minute time frame, you'll get tossed around constantly. But when you understand the direction of the tide, the monthly or weekly narrative, you can surf the waves instead of getting smashed by them. That's the power of respecting the higher time frames. They give you direction, context, and confidence. The daily time frame is where everyone should start when they first approach the charts for the day. No matter where you are in the world, whether you are actively trading or just watching the market, the daily time frame gives you the clearest thread on what you should be paying attention to right now. So now that I'm on the daily time frame, we want to repeat the process we did on the higher time frame. So we're looking for the closest unrecovered vector candle below and above price. Below price, I can see this is the closest unrecovered daily vector candle, so I'm going to label that daily area of interest. I also like this one because it has confluence with the 50 EMA on the daily time frame. Now I want to find the closest unrecovered vector candle above price. So currently it is this one here. And now this is where it can start to get a little bit messy on your chart because we have a weekly area of interest down here, a daily area of interest, and then another one here. And as you start to drop down in time frame, you're going to see a lot more. So this is where we can start clearing our charts just like we did with the monthly time frame. And because this is now my area of interest to watch below price, I can get rid of this weekly area of interest or put it into a folder. So that is what I'm going to do. And I'm going to hide that. As well as 50% of the monthly vector line, I'm going to put that into a folder and hide that one as well, just so it starts to clear my chart out. Interestingly enough, we are now breaking through this area of interest. When it comes to unrecovered vector zone, we always pay attention to the bottom, the middle, and the top of it. If we start to get candle closes above 50% of this vector candle, then you would assume that they're going for the rest of that vector candle. So currently, we are starting to push through that. But what happens when price pushes through this unrecovered vector candle? Because currently, I do not have any more unrecovered vector candles through here. This is when we would use the smaller time frame to see if there's any unrecovered vector candles through this move. But if there isn't, then our next resistance level is up here at the all-time high. So speaking of support and resistance, I now want to go through and mark out any major support resistance zone. My resistance zone would be the same as my weekly and monthly. And now for my support, I can move this a little bit higher So it's more like this because resistance, resistance, broke through, and now it has retested as support, which means I can get rid of this line as well. And now we want to have a look at what the market structure is telling us. Currently, we have a W formation. From this W formation, we have created new high, higher low, higher high, higher low, higher high. And then we had a deep retracement to the downside. But on a macro scale, being the weekly and monthly time frame, this has still created a higher low. So currently, market structure on the daily time frame is still bullish. Now, this is the point we need to be cautious because although we are making higher highs, higher lows, higher highs, this move to the downside may have actually given us a drop level 1 on the daily time frame. And this here may just be a final damage M formation. Now, for those who are not familiar with the model we trade, this is what it looks like. We have a W formation with 3 level rises. Then we get a reversal pattern that leads us into a drop level 1, drop level 2, and drop level 3. Now we have many different reversal patterns with a final damage M being one of them. And currently that is what we have on the daily time frame. With this move here being a potential drop level 1 after the final damage M, because I can see that the 50 EMA had broken with volume, made a run to the 200 EMA, and now we are seeing a retracement. So although we've marked out our key vector candles, our support and resistance levels, established what the market structure is doing, this is where we want to start layering in our more advanced strategies. So more than just support and resistance and market structure. If you have learned the TBD system or have gone through the courses, you'll know exactly what I'm talking about. Now this bit may sound a little bit advanced, but hopefully you can follow along. The model we trade plays out on all time frames. If this move was a drop level 1 for the daily time frame, like we can see here, we'll see 3 hits or 3 drop levels on a lower time frame, that time frame being the 4 hour. And within those 4 hour levels to the downside that are within the daily time frame drop level 1, you'll see the model play out on the 1 hour and 15 minute time frame many times within this drop level 1 on the daily time frame. So during this move to the upside, we would be looking for the model on a lower time frame, and if the model starts to exhaust on the lower time frame and start to give us an early change in trend, just like what I was saying on the monthly and weekly time frame, then that could be our hint that we may retrace into this daily area of interest. And if we manage to break through that or fail to hold the EMA, then we may come down lower into a previous weekly vector we had marked out. But what is going to change my mind on that scenario is if price can break through on increasing volume through this level and it comes back to retest, manages to hold in this area of interest and holds the EMA, if we can create another higher low, then maybe, just maybe, we go ahead and break the all-time high. But for now, we've done everything we need to do on this time frame. We've marked out our vector candle, looked at market structure, put in our major support and resistance level. So now we can drop down to the 4 hour time frame. Now that we are on the 4 hour time frame, we want to repeat the process again of marking out the closest unrecovered vector candles below price and above price. The closest unrecovered vector candle below price is this one here. So I'm going to go ahead and mark out this area of interest and label that 4 hour. And then I want to look for the closest one above price. So that means I have to scroll all the way back and I can see that we have 2 4 hour vector candles in the current daily vector candle that we mark out. So there's no need for me to change that daily area of interest. I'm going to keep it the same. However, I didn't have a daily vector candle above this one. And currently we are already recovering this area of interest. And if price is to break through, well, what is the next area of interest? I'm going to mark that out because I want to be prepared. So let's scroll there and look for the next unrecovered vector candle, and it would be this one here. Now it is at this point where we have vector candles marked out all over the shop. So which one are you paying attention to right now? In this case, this is where I would get rid of this unrecovered vector candle because I can see that we have bounced off 50% of this 4 hour vector candle and price is starting to pull away. So at the moment, it is not relevant. And instead, just to clear my chart up, I'm going to mark out 50% of that daily vector candle, and then I'm going to put this daily area of interest into its own folder so I can hide it, and if price decides to drop, then I can quickly just flick it back on. I'm going to do the same with this previous daily vector that we had marked out. I'm going to mark out the top of it because I can see now that we have crossed 50% of it and we are more than likely going to recover the full vector. So again, I put this into its own folder and labeled it top of daily vector. And now that clears my chart up a lot. The next thing we want to do is mark out any major support resistance level. So if I look left, this would be my major resistance area. as I can see price consolidated underneath, rejected, did the same here, rejected, rejected, and it's held as support as well. So that is my major 4-hour resistance level. And then I want to look for my major support level. And for me, it would be this level here because it held as support. We consolidated above it, held as resistance, resistance, support, support. This means I can get rid of this daily time frame support or put it into the daily time frame analysis folder. And now we want to establish what is the market structure doing here on the 4-hour time frame. When it comes to looking at which point do I look for higher highs and higher lows, you always want to go back to the last peak formation low or peak formation high. In this case, this is the last peak formation low. So I would start my count from here and apply the model we trade. I can clearly see we have a W formation. Price broke the 50 EMA with volume and made a run to the 200. From there, two things happen. In between each rise level or drop level, price will either pull back or retrace or go into consolidation before the next move. And in this case, we went into consolidation and price moved out into consolidation again, and now price is making the next move to the upside. So clearly I have a new high above this previous lower high, consolidation, another new high, consolidation, higher low, and now we are creating another higher high. This is where if you trade the model we trade, you would start to count your levels on the 4-hour time frame. Now you see what I did on the daily time frame where I said if we get a lower high or if we can hold the EMAs, create a higher low, then maybe we break the all-time high. Well, you want to do the same thing on the 4-hour time frame. You want to build a bullish and bearish scenario. And this is one of the most important parts of my routine. Every single day, I build out two potential scenarios, one bullish and one bearish. And I know that sounds cliche, maybe up or maybe down, but if you only plan for one outcome, you tend to build a bias and become emotionally attached. This keeps your thinking flexible. If price does this, I'm ready to respond with that. You avoid frustration, revenge trades, or tunnel vision, and also, what if you are wrong? This keeps you from being biased or caught off guard, because the market doesn't care what you think. It will move however it wants. So the more flexible you are, the more confident and calm you'll be. So in this case, this is what it would look like for me. At the moment, I can see we have a rise level 1 on the 4-hour time frame, a rise level 2, and it looks like we are in rise level 3. If that is the case, then I should be on the lookout for a potential reversal pattern that could lead me into 3-level drop. That is my bearish scenario. Now, my bullish scenario would be if we can clear this area on increasing volume and we can come back to retest a major support or EMA and change market structure there, then I would be leaning bullish, because this little W formation on the 4-hour time frame or 1-hour time frame even could be the start of the next leg to the upside for the daily time frame. So I'm trying to establish a bullish and a bearish scenario. But now I've done all of the work I need to do on the 4-hour time frame. I've established that the macro trend is definitely bullish. That's your monthly, weekly, and daily chart. And the intermediate trend, which is the 4-hour time frame, is again definitely bullish. I've marked out my areas of interest. So now that this time frame is done, I want to go to the 1-hour time frame and repeat the same process. If you need an exchange to trade on, consider checking out Bitunix. It is non-KYC, so you can use it from pretty much anywhere in the world. Bitunix offers spot and futures trading, and have recently introduced an earn program, which means you can now stake your crypto to earn passive interest on it. By using the link in the description below, you'll get a lifetime 20% trading fee rebate on all of your trades. And that's not just a one-time welcome bonus, that's for life. So if you're looking for a reliable exchange to trade on, check out Bitunix and make sure to use the link below to get your fee rebate. Now that we're on the 1-hour chart, we want to repeat the same process we used on the daily 4-hour charts, but with more precision and intent. This is where we begin aligning the narrative from the higher time frame with what's happening more locally. We're bridging that gap between swing trading and potential intraday setups. We want to start by revisiting any key vector candles visible on this 1-hour chart and look for the ones that cause the fast moves or broke structure, especially the ones that sit inside your higher time frame zones. These are usually more refined and actionable at this level. From here, I'm looking for any unrecovered vector candles above price. I already know that this level here is the top of the daily vector candle that we had previously marked out. However, I'm going to scroll left anyway and look for the 1-hour vector candle that is closest above price. So this level here is the unrecovered portion of this vector candle. I can see it has already been partially recovered. So there's only a small part of that candle left that remains to be recovered. So I'm going to look for the next one just in case. And above price, the next one I have is this big red vector candle. Now I've already marked this out on the 4-hour time frame, and I'm happy with the vector candle that I have marked out on the 4 hours, so I'm not going to bother marking this vector candle out as well. But what I would do is take note that there is a 1 hour vector candle within my higher time frame area of interest, and at this point 50% of this unrecovered vector lines up with 50% of the 4 hour vector as well. So I would just take note of that, and with the little vector candle that's left to be recovered on this one, I'm going to see if it lines up with the top of my daily vector candle, because if it does, then there's no need for me to mark it out. Otherwise, I'm going to end up with areas of interest all over my chart. And I can see that the rest of that unrecovered 1 hour vector lines up with the top of the daily vector that we had marked. So I'm going to remove that. And then I know that if we can break this level on increasing volume, then I would pay attention to the next area of interest, the bottom, the middle, and the top of it. So in this case, no need to mark any 1 hour vector candles above price. So I'm going to look for the ones below price. The closest one to price is this blue vector candle. The one below that is this 1 hour vector candle here. I can already see that we have bounced off 50% of that 4 hour vector and made a move to the upside. So in this case, what I'm going to do so I can refine the area is just labeled it 50% of my 4 hour vector, because I can see we have rebounced there. And I'm going to add this area of interest into its own folder, just so I can hide it again. And it is at this point that I would mark this unrecovered vector candle out, as this one is the closest 1 hour vector candle to price. We now want to look for our major support and resistance level. So clearly this 4 hour resistance level we had marked out would be the same level I would mark out for the 1 hour time frame too, because I would have to scroll all the way back, and we held as resistance, 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 resistance. So that is going to be my resistance level. And my next support would be this area here, because I can see price has bounced there, held as support, rejected as resistance, and multiple rejection through this area as well. We now want to go back to our last peak formation high or low and establish what is the market structure telling us on this time frame. So clearly I can see we have a new high that broke above the last lower high, a higher low, and now we are creating a new high above this previous high here. So higher high, higher low, higher high. The 1 hour trend is also bullish. On the daily time frame, I mentioned a final damage M formation, which is where the second peak is higher than the first peak, and in this case we have a final damage W formation. If I am to count my levels here, I have a rise level 1, and this here would be my rise level 2, potentially still in progress, which means I should be looking for a rise level 3 on this time frame, which may look something like this. So once we've established where our major support and resistance levels are, where the unrecovered vector candles are, and we apply the model we trade, this is where we can start to develop the story more. So we're at a key resistance level now. However, price may continue to recover the rest of this daily vector, and then price may come down to recover this unrecovered vector candle before giving us a rise level 3. Now, knowing this and knowing the model we trade, it helps reduce FOMO, because if you know that this is a rise level 2 and you're expecting one more rise, then you should see either a retracement or price go into consolidation before that rise level 3 happens. And if you didn't know this and you were new to trading, then you might see this as the key resistance level and placed a buy stop above price, which means as soon as price crosses that area, it enters you into a long trade. You put your stop loss below this resistance level, and then you try to target the next area of interest, essentially FOMOing the trade. It also helps you to know that you don't want to short this area should you get a bearish candlestick, because you are expecting one more rise here on the 1 hour time frame. And this is where the model helps take away the confusion. And instead, if you were looking for a short position, then you would wait for this rise level 3 to happen, look for your reversal patterns after that, and maybe, just maybe then, you consider opening a short position. So for now, you let this one move away. You don't FOMO the trade if it starts to move to the upside. You let it run. You let it come back and give you a retracement, and then you can look for the next long position. And this is the kind of detailed information you get from being a part of the TTC community. Not only do we run live sessions 3 times per day and run sessions where we hunt and live trade together, we also post chart update 3 times per day. And this is the chart update I did yesterday before the move we are seeing now to the upside. So bullish scenario is, in my opinion, there are no new longs to take from where we are. The next best long would be around the marked area of interest. We already know from what I said earlier, we pay attention to the top, middle and bottom of the vector candles, which has confluence with 50% of our higher time frame vectors. EMAs, and other key levels. Your scenario is, I'm personally not looking for a short, and if you were trading the weekly setup, which is the 1 hour time frame, then you wouldn't be either. And this is where we were at the time. We had our W formation, rise level 1. The next area to look for along was back in this area of interest. And if we look at the charts, that's exactly where we bounced 50% of the 4 hour vector. And this is why it is key to go from the top down, because those higher time frame areas of interest that you marked out also have confluence with the lower time frame and can help you to pinpoint your entry points and exit points. And if you trade the model we trade, then you also would not have been looking for a short here, and instead you would have waited to look for the next long position. Knowing the model we trade helps you to avoid confusion. It stops you from shorting at the wrong time and helps you be on the right side of the move. So before you do anything, you want to zoom out and ask yourself, if you were wanting to take a short position in this area on the 1 hour time frame, does that trade idea align with what I saw on the 4 hour or the daily time frame? If the daily time frame was clearly showing you bullish market structure as well as the 4 hour time frame, then what you were seeing here may have just been a retracement for that higher time frame. And if you are trading against the higher time frame, you need to know that so you can adjust your risk and expectations. Alignment gives you confidence, misalignment demands caution. And this is where you have to decide, am I day trading this leg or sitting out? Because you don't have to be a part of every move that happens just because you can. If the higher time frame was showing you and you applied the model we trade that this was a rise level 2 for the 4 hour time frame, this was consolidation, and you were looking for one more rise on the 4 hour time frame to give you rise level 3, then taking this short position doesn't make sense. If it doesn't offer you good structure or you prefer waiting for the full move to complete, then sit this one out. It keeps you from over trading or checking your chart at every session flip. And instead, this is the better trade to wait for. You let price break out, you let price return to the EMAs, your key vector candles, your key support level, and then you weigh up whether it meets your minimum risk to reward should you get the right candlestick pattern. The structure, confluence, risk to reward confirmation. If any part of that is missing, then that's a red flag. But what if it runs without you? This is a big rule. We don't want to chase price action. The same logic applies here. If you had chased this move to the upside and FOMO'd in, then you missed out on the better entry. Price has now taken off again. We don't want to chase this move, especially because we're at our key resistance level. We're near the top of the daily vector candle. You are better off to let price retrace back down, then look for a new trade to the upside. Because if you start chasing moves that don't meet your criteria, your stop loss will end up in the wrong place. Your risk to reward will suffer, and emotionally, you'll start trading reactively. If you're loving this structure and want to learn for yourself and see it applied in real time, join us inside the 𝗖𝗵𝗃𝗃 community. We've built a membership system that gives you access to everything we offer, from beginner courses to advanced strategy breakdown. These are the exact strategies we teach and talk about on this channel. Now, we offer 2 types of memberships to suit your style. The first is a self-learning membership, and this one's perfect if you prefer to learn at your own pace without distraction. You'll get the learning material and the proteins daily market updates like what I just showed you before, but it is 100% self-paced. So if you have any questions, there's no direct access to the team. It's all about independent learning. The second option includes full community access. If you know you'll benefit from being able to ask questions, join live sessions, and be part of a supportive group, first class membership is the one I would recommend. So whether you like to go it alone or be part of a trading community, we've got a path for you. You can check out both options by using the link below. Alright, so let's bring this all together, because we started at the monthly and weekly timeframes to map out the bigger picture. Then we dropped down to the daily timeframe to refine those zones and build both a bullish and bearish scenario. From there, we dropped down to the 4 hour chart, which helped us align the higher timeframe narrative with the current flow of the market. And finally, on the 1 hour time frame, this gave us precision to either take a high probability day trade or decide to step aside and wait. The real skill here isn't just drawing levels, it's learning how to read the story across time frames. When you understand how each time frame connects, you stop reacting to price and start anticipating it. That's what separates struggling traders from confident ones. Clarity and confluence over chaos. Now here's something to watch for. Next time you do your top-down analysis, if your 1 hour setup contradicts the daily time frame, don't dismiss it right away. Ask yourself, could this be a retracement offering intraday opportunity, or is it the early sign of a full reversal? That single question can keep you on the right side of the move and help you decide whether to engage or step aside. Next time price approaches your refined zone, pay attention to how it reacts. Does it respect the area, or does it blew right through it. That reaction tells you everything about whether the market is respecting your analysis or it's about to shift gears.